It's time to bring you our feature for today. Nigeria generates about 1.2 trillion naira in tax revenues in the second quarter of this year, marginally lower than the 1.27 trillion naira quarterly target. Now, this is according to data from the Federal Inland Revenue Service. The figure also indicates a decrease when compared to the 1.4 trillion naira tax collections in the second quarter of 2019. Now, details of the collection show that the petroleum profit taxes generated 440 billion naira. The non-oil taxes did not meet its 1.1 trillion naira target, as it generated 848 billion naira in the quarter, and company income tax generated 324.3 billion naira in the second quarter, while gas income tax generated 77.7 billion naira. The report further states that the import VAT collected by the Nigeria Customs Service generated 81.62 billion naira, while non-import value-added tax generated 245.6 billion naira, and capital gains tax generated 617.4 million naira. The stamp duty now being collected by the service generated 62.6 billion naira during the period, as against a target of 4.3 billion naira. I have joining me now in our Lagos studio, Olusegun Elemo, Public Finance and Policy Analyst. Good to have you on the Breakfast Show today.
Thank you for having me.
Now, what do you make of the current reports, the breakdown we've had vis-a-vis the targets that were set by government?
I think it's a good indication. The target was almost met, but of course not sufficient to cover the revenue targets holistically when you look at the 2020 budget. But by and large, I think FIRS tried to close the gap. But what we expect to see, and as you saw, the petroleum profit tax, did the best in this category, and we expect that this will now improve as we move to Q3 as well as Q4. But other areas that we also need to look at. And I've always said this, that it's not much about revenue generation, but it's much more about revenue utilization. So irrespective of how much you generate, if you utilize properly, you will get value for that money. Also, you saw what happened with the stamp duty. Was almost how many percent now? Well, close to 1,000%. Than the target that was set. So we expect that all of these revenues, because the taxes, whether company income tax, and as you know, the company income tax is putting quite some pressure on companies because the COVID-19 has affected a lot of corporate entities. So you expect that these companies are paying, out of a very difficult situation, and even individuals, the consumption tax, via VAT and all of that, people are paying through this difficult situation. We expect that the revenues will be utilized properly, and the citizen will get value for all these monies that are coming in.
Well, that's the expectation. But at the end of the day, Olusegun, despite the improvements, gradual improvement we've seen from the part of government intensifying efforts to increase the tax net and also revenue generation capacity, at the end of the day, some say, well, the pressure is a little bit much on the Nigerian populace, especially at this point in time. But going back to our tax to GDP ratio, what do you think is the way forward now to strategically move forward?
I think we need to ramp up collection. A lot of people are not in the tax net right now, and government needs to look at the efficiency in the collection of taxes. For instance, my organization, we looked at some inefficiencies in tax collection over the last few years, and we discovered that about 4.1 billion was not even paid by government agencies themselves, and not just companies now, not just individuals, but even government agencies that needed to collect money from the contracts they award to whether companies or whatever, that needed to take out whether withholding tax or VAT. They didn't do that, and they didn't remit all of those monies to FIRS. And when you look at the 2017 audit report as well, about 44 billion naira was not collected or remitted to the Federation account. So when you look at all of these things and then you now add up all the people that are not in the tax net already, I think government needs to do more. But more importantly is that the kind of federal system that we are running now is not efficient. And then there is no incentive for all the arms or tiers of government to work more, adequately in ramping up revenue. But so I think the federal government needs to look at all of these things.
Now let's talk about the tax collection mechanism the government is adopting at this point in time. What do you make of this model vis-a-vis the targets and the challenges we've experienced so far?
Yeah, when you look at the tax policy and then look at the tax code of government and consider the incentives that are available, I think we, considering the pandemic, we needed to do more because, of course, tax incentives are intentional policy of government to be able to cushion the effect on the economy with regards to certain challenges, and in this case now the pandemic. And then what we expect is that looking at, for instance, the poverty rate of about 40%, unemployment more than 20%, you expect that government will now be focusing on increasing employment, widening investment, and improving capital transfers. So those are some of the things that we expect that government should do by providing tax incentives. But you also know that if these incentives are not properly implemented, they do have their own negative impact, which could mean that in terms of resource allocation, government could lose revenue. And then in terms of compliance, there could be compliance cost with regards to the implementation, such that investment is now focused in particular sector. And then there could also be revenue issues that those who are supposed to get the incentives are not the actual ones that are getting, and that's what we've seen with regards to incentives being provided. What I expect is that there'll be more attention on SMEs, there'll be more attention on vulnerable sectors of the economy, and then also the final cost, there could be corruption cost when there are no clear guidelines, or there are very minimal or inexplicit policy direction.
Those are grey areas that have to be attended to. So at this point in time, where we're still dealing largely with the impact of the COVID-19, looking at the forecast for the Q3, what are your predictions, especially taking a note that so many have called for tax waivers and a whole lot more, so this would definitely affect how much the government is able to generate?
Yes, it will affect, but I expect that with the gradual ease of the lockdown across the world, and then I expect that crude oil sales will improve, and the price of crude oil will also go up a little bit, and then OPEC will lift some of these restrictions in the production quota to Nigeria, and then we'll be able to get more money from crude. If we're able to do that, we could actually limit the pressure on taxation, because right now, if you ask me honestly, companies need to breathe a little because there's been so much pressure, and many of them have been pressured to lay off, which is not supposed to be. So by the time you're having Q3 figures of unemployment rate from NBS, you'll be having some kind of issues with regards to that.
Hopefully we have some headway come through at the end of the day. Thank you very much for your contribution on the Breakfast Show today, Olusegun Elemo.
Thank you for having me.